When it comes to investing in the stock market, you have quite a few different areas that you can put your money. You have stocks, bonds, mutual funds, ETFs. In this video, we're going to break down the main difference between mutual funds and ETFs, which are exchange traded funds. So enjoy this video. Hello everyone, thanks for stopping by the Financial Beat YouTube channel. For those of you that I haven't met yet, I'm Logan Sadler. Thanks for taking the time out of your day to watch this video. We hope this provides some good education for you. Today we're going to be discussing the difference between mutual funds as well as what ETFs are, which are exchange traded funds. So as we always talk about, me being a financial advisor, we are licensed to use really a multitude of different products and services for our clients out there, right? You have stocks, bonds, mutual funds, real estate investments like REITs and things of that sort. You have the insurance side of the world, which we've covered in some of our other videos. Today, I really wanted to break down the two most common types that a lot of us really hear about and really talk about when it comes to the market, whether we think we're talking about those or not. A lot of us have heard of stocks, right? We all know what a stock is. If I buy Apple or Amazon, I know that I own Apple or Amazon. So in these videos, we're actually going to break down in this video what the different types of mutual funds are, what ETFs are, and really kind of wrap this into really what are the similarities as well as what are the differences. So let's first off start with mutual funds. Those of you that don't know what a mutual fund is, we're going to break this down. So basically what a mutual fund is you're buying a basket of securities, right? So inside that mutual fund, you may actually own that Costco or that Amazon or whatever the stock is that you kind of wanted to buy. You might actually own it inside that mutual fund. The nice part about mutual funds is they tend to diversify risk, right? There still obviously is risk involved depending on the fund you're picking, but essentially is if you choose Amazon, right, that might go up, down, sideways, we have no idea, and all your money is, so to speak, in one basket. The nice part about mutual funds is now you don't own one stock, you might own 10, 15, 20, or 30 stocks inside that one mutual fund. So now if Amazon goes up and we maybe only own a piece of it in the mutual fund, that's great, we might get a piece of the upside. But if Amazon tends to have trouble or XYZ stock tends to have trouble, then that means we don't own as much of it, right? We're diversified in other baskets. So it tends to be a really good diversifier across equity markets, bond markets, real estate. I mean, pretty much any dynamic you could think of, there's probably a mutual fund or ETF for that. But that's how those work from the get-go. A lot of our 401ks, 403bs, a lot of those are through mutual fund companies or they're invested in mutual funds. Mutual funds can be a great way for low initial investment. You can start out doing monthly payments into it, like $50 a month, $500 a month, $10,000 a month, whatever you're putting in there. You could buy mutual funds pretty cheap, and it's a great way for a lot of us to get started. Now, ETFs tend to work the same way, meaning that you could put X amount in, low initial investment, as well as they also buy a basket of stocks. That way you're diversified, or basket of assets, meaning bonds, real estate, anything that they're tracking. You typically can find one for that. They're a great diversifier. The big two differences, I would say they're very similar from the view of it. I've had some clients I'm meeting with, and some of them are pretty smart clients, where we've been meeting and they've said, well, Logan, you're telling me to do this, that, or the other. I've heard things about mutual funds that aren't great or things about ETFs that aren't great. What is the main differences? If I had to break down the main differences for you, I would really say the big differences are ETFs tend to be less actively managed. So there is some actively managed ones out there, but a lot more of them tend to be straight index funds. So you're buying straight into the S&P 500 or straight into the Dow or straight into XYZ, right? So essentially, like you could take a look at this mutual fund or this ETF right here. This is SPY, which is one of the more commonly known S&P 500 ETFs. This tells you exactly what it owns and gives you a really great idea. It doesn't buy or sell a whole lot. The whole goal of it is to return what the S&P returns as far as performance. So it's a really great way to passively invest into the S&P 500. If you go to this page, it shows you the expense ratio. Now in the expense ratio, this is where the main differences are. A lot of times mutual funds tend to be more actively managed, meaning that manager might be making a lot of different buys or sells in those mutual funds to hold those securities, which can cause, right, if you're paying for somebody or someone's managing something, there can be an extra cost. So that's one of the downsides that tend to come with mutual funds. If you're someone who is fee conscious, which a lot of us are nowadays to some extent, right? But basically how that works is you're paying somebody something. So the mutual funds tend to be a little bit higher in internal cost. A lot of times they'll call that an expense ratio. Mutual funds can run really anywhere between 0.5% up to 1.5–2%, depending on those mutual funds, but they tend to be more expensive just out of the box than an ETF. A lot of the times you might own very similar things in there, but the ETF tends to be more passive. They don't have an active manager on a lot of them, so they don't trade as much. So a lot of the expense ratios tend to be very low. Some of the ETFs out there are between 0.03 all the way up to basically like 0.05, 0.5%, 0.050, sorry. And basically how that works is the reason why they're a lower cost is because they're not moving as much throughout. Now, some of you might want more active funds. Some of you might want more passive funds. Actually, the cool part about it is a lot of the times the ETFs nowadays as well have some active ones out there that can be a fit for you depending on what, again, your circumstances are and what you're trying to achieve. But there is something out there for everyone. I think the biggest difference, though, to me tends to be cost. A lot of the times the mutual funds, you're typically paying more for that mutual fund, which tends to hold very similar holdings as that ETF. So it's very important that we're looking at all the different baskets out there. The other thing is, remember how I mentioned actively managed on the mutual fund side? A lot of the times that creates extra tax consequences. So ETFs might be more tax efficient in some cases than a traditional mutual fund company or mutual fund that you're holding. So it's very important when you're looking at all of these things, when you're looking at your investment plan, your retirement plan, it's so important that you look at pros and cons of every investment, because those of you that watched this channel before, I say there is a lot of good things about a lot of investments, and there's a lot of bad things about a lot of investments. Each of them have kind of their give and gets, their pros and cons. So it's important that you kind of look through them all. I hope that was a great review for you, or a great education on really what those investments are, what they're designed to do. It's very important before putting your money into any of these things that you understand your risk and make sure you're working with a professional. So make sure you understand what you're getting yourself into, and make sure, again, you understand the pros and the cons of every investment you're choosing out there. So I hope that was a great review for you guys on ETFs versus mutual funds, and we will see you again on our next video.